Hey everybody, this is Esther Goulias, the tax lady, and we're here to talk taxes and what's happening in the lovely world of income tax. And we'd love to hear what's happening, whether you're being special and you're getting these love letters from the federal government or state of New York, or some of the problems that you're having, because we'd love to help you. Our phone number here in studio is 8030930, 8030930, star 930 on a cell phone. And the toll-free number is, Chris doesn't know.
1-866-930-WBEN.
Could be. But anyway.
I don't know, off the top of my head.
Boy, when Steve was here, he would know. Of course, Steve Jacobson is getting married next week,
weekend.
and he's moving away to Philadelphia.
We used to razz him about
So we're going to really
married.
miss him. Let's see, things that are happening in the wonderful world of tech.
He wanted to chime in.
Yes, sir.
Yeah, the number is 1-800-616-WBEN.
Oh, thank
That's
you.
close.
Thank you.
616-BEN.
WBEN. Some of the things that are happening this week that I thought would be interesting is on July 29th, the Wall Street Journal came out with an article that the federal government has demanded that the state of New York repay $1.3 billion in Medicaid money that they distributed in 2010 for the care of 1,300 developmentally disabled people. That's about $2 million a patient in 9 state facilities from Staten Island to Rochester. The New York State's Medicaid program is one of the nation's most expensive, and after the review, New York State couldn't justify some of the costs, and the federal government said that the program lacked proper internal controls. So the state is begging for a change,
right?
But right now they're supposed to pay back the federal government $1.3 billion for Medicaid abuse in the state of New York because the federal government kicks in half.
Right, and that's a lot of bread. And I was talking to Chris beforehand, and that's why the governor made us all go to managed Medicaid. And so that's why you'll notice all these managed Medicaid like First Choice or Fidelis, because they're managing the system now, because supposedly, as you can see, that New York State didn't do a good job of it.
Well, I'm going to tell you, when you're on Medicaid, you have much better insurance than if you have the insurance that the rest of us people pay. So
right.
I bring that up because it's important that you would hold your people that are in power accountable. So certainly you want to take care of developmentally disabled people, but $2 million a person?
Right.
Hello. Anyway, I want to talk about that. And then some of the letters coming in from the federal government this week. Obviously, some of the choice letters are usually that people didn't include all of their income.
Right.
Specifically
Stocks.
Sale of stock.
That's right.
So if you have stock and you get that and you file really before March the 1st, you're just asking for trouble because the brokerage firms don't even get out that final 1099 until sometimes mid-March.
Right.
So you want to make sure that if you do file early and then you get the 1099 form in March, amend the return and put it on, because they will definitely get you. Now, thankfully, because it's a sale of stock, and stock has a cost basis, in most of these situations, the letters are wrong.
That's
and
right.
we're able to
That's
fix
right.
them. But it's still a pain in the keister to get that in the mail because it drives you crazy. It makes you nuts.
Yep. And a lot of times when you talk to these people who get these letters, they're like, but I didn't sell anything. Their broker transferred or changed their investments around, and so they're thinking, I never asked them for a check for $10,000, so I don't understand this. It's the internals of it that's buying and selling.
Right. Well, even if you listen to the financial guys who are on just before us, they're talking about rebalancing portfolios. And when they rebalance, that means they sell some and take that money and buy other things. And so those are things you want to really make sure that you report on your tax return, because the federal government gets a copy of it all.
And
so,
they automatically deem it short term, which gets you ordinary income tax.
Right. And so what you want to, and they don't give you a cost basis.
Yep.
Right? So you want to make sure if you're somebody that's gotten that kind of a letter, give EG Tax a call. We'll be very happy to help you with that kind of stuff, right? And I had a client that just got a wonderful opportunity for expansion. He's been given a great big contract by Erie County and potentially the state of New York, and he came in to find out should I move from an S corp to a C corp? And so part of what we were doing this week was helping him to tax plan, and that happens all the time.
Absolutely. Yep. It ties in really nicely with the business services, business solutions. Maria can help people with their books, with accounting, with payroll, because there's nothing more important than having a good set of books that helps you to prepare that year-end tax return and your balance sheet. So another part of business solutions is sitting down, and Chris sat down with one of my clients this week, and he has a home inspection business, and he was asking Chris about how to keep track of what money's coming in and what expenses and what type of business corp filing status he should be in. I think you said S corp for him,
And
right,
actually,
Chris?
and actually, we were with a specialist whose job, and we're thinking of getting teaming up with them, whose job is to take a corporation who's maybe $1 million, $2 or $3 million, and help them to tweak their numbers so they make more.
That's right. That's
you know,
right.
and maybe,
You know.
and especially like with Obamacare coming up and all the penalties
Yep.
that are being imposed if you aren't have health insurance and you have more than 50 full-time equivalent employees. Those are things you want to make
Yeah.
sure you get.
I've heard
fixed.
you say so many times, Esther, a fresh set of eyes is invaluable, and that's sort of what they bring to the table, because for many years you've probably been doing it this way, but if you look at it and you could save thousands of dollars by tweaking something, as you say, it's really invaluable.
That's right. That's right. Okay, and then the other thing is our tax school's coming up in the middle of October.
Yep. I mean, you could tell by the weather. It's almost school time, even though it's the end of July or beginning of August. Yep, but our tax school starting in October. You know, classes for the basic people who want to learn. We have those classes, and for those who have dived into it before and want to continue, we have advanced classes too. And both of them have job opportunities available when you successfully complete the course.
Right. So, or maybe you want to become an enrolled agent. We have enrolled agent courses, and all of our courses are approved by the Internal Revenue Service for continuing education units.
Right. And then you were talking about letters really quickly. And one of my clients got a letter this not so long ago this week, and it was failure to timely file. And they filed not a couple weeks ago, but they hardly owed anything. But still, that penalty is 25%. So I explained it to them, and even though they owed under $1,000, it's still a really hefty penalty.
Because that $1,000 was due on April the 5th.
That's right.
That's
right.
And you know, it's 5% a month. And guess what? From April 16th to April 30th, that counts as a month in your thing. But it's only 15 days for the IRS.
But the IRS has special ways of counting.
Yes.
16, 17, 18, 19. Oh, that's a month.
Yep. And, you know, another thing, I think I got 3 calls this week for scams from people pretending to be the IRS, saying, where you got 40 minutes to pay us, the police are on their way. And one of the ladies that called was very smart. While they were on one phone, she dialed from a cell phone, the Niagara County Sheriff, and said, "Are you on your way to arrest me?" And the person heard that and hung up the phone.
Wow.
So I tell everybody that calls, call the local FBI, get their names, their numbers, anything you can, give it to the local FBI, because that is truly fraud, because they do not pick up a phone and call you and say, "Esther, guess what? We're coming to get you."
Right. They may call you once you're in the process
Once
of an
you
audit.
Yep.
But they would recognize, they'd give you your badge number, and they never say we're going to come to put you in jail.
Right.
So, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We'd love to hear about your tax situation, your tax questions. We're going to talk about supplemental security income on the other side of the break, and we'll see you on the other side. Tyler,
Yes,
would that
Esther.
be Tom Petty running down a dream?
Ah! You got it.
I did. I got it because you told me. Because I am like so stupid. I know the words. I just don't know who's singing.
And you
it.
know the rhythm.
And I love the rhythm.
Yeah.
I know. We dance in here.
It's a very
Lot of
good
dancing.
song.
We dance a lot of dancing. I'm Esther Gulius, the tax lady from EG Tax, 8030930. Star 930 on a cell phone. This is 930 AM WBEN, and we're going to go to the phones and we're going to talk to an unknown person on line 1. Hello. Hello.
Hello?
Can I help
Hello?
you?
Yes, can you hear me?
I can hear you.
Okay. The question is a kind of sort of a theoretical one. If you work for, let's say, a multinational company and you spend a year overseas, my understanding is, if this is still the case, your earnings are not subject to federal income tax. But what about any other income, and can you then use that to your advantage to, say, clean out your 401k tax-free?
Okay, so if you have income earned overseas and you are subject to the tax system over there or have a permanent residency over there, then there is an earned income exclusion. It's earned income exclusion, and your 401k plan would not be earned income. And it's about
98.5 roughly.
That you can, so not all of it's tax-free, just part of it. Okay? Now, if you are a U.S. citizen with income in bank accounts outside of the United States, like let's say that you're somebody that married a Canadian citizen and you're in Canada, then and you're working in Canada, then you'd have the earned income exclusion that you could apply when you're doing your federal return, because you do have to do a federal return to exclude it. But you might have to file what's called an FBAR report. Right, Chris?
Right,
Federal
the
reporting.
financial an account. But it's reporting that you have more than $10,000 overseas
At any point in time.
at any
during
point
the-
of time. You do that separately on your tax return. If you have more than $50,000, you got to do both on your tax return, report it, and separately to the government.
And there is a penalty for failure to file the FBAR. So if we have
50%.
Canadians that are U.S. citizens, maybe dual citizens, and they're living in Canada and they have income over $10,000 in investments or whatever, you have to file this FBAR report, and we can help you. You can call EG Tax at 632-7886 Monday through Friday, and we'll be
Yep.
very happy to help you
And going back to his question, it's about 98.5. You use the form 2555 with
to exclude
to
the-
exclude the income. If it's
It has
more
to be
than
taxable. It has to be earned income.
earned income, if it's more than that, you can use the 1116, the foreign tax credit, for the remaining part of it.
if you pay foreign taxes.
If you paid the foreign tax. So it's not all, I've talked to some people, they say, I'm going to make $150,000, it's all going to be tax-free. Not necessarily. In regards to lowering taking money out of your 401k, you may not want to do that because there's the 10% penalty, but you can, maybe if you're married and this is your only income, take about $20,000 out and not pay tax because of your standard deduction and your personal exemptions.
Right. So, in other words, let's say you had $70,000 in income earned abroad, and you were able to do the 2555 and exclude that income. It would be a great opportunity because if you had exemptions, dependents, standard deduction or itemized deduction, you might have $20,000 or $30,000 worth of things to write off, and you could offset that a partial 401k deduction.
But there's nothing that would exclude the 10% penalty, right?
If you're under the age of 59
Right.
and a half. Right.
Okay.
Thank you.
You're welcome.
Thank you.
I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I know we have people holding, but I want to talk about something we've really never talked about. Everybody understands about Social Security disability, but we really haven't talked about supplemental security income,
Right.
which is SSI.
Right.
Okay, and to qualify for SSI, what it is, it's a program from Social Security that pays monthly benefits to someone age 65 or older, or if you're under the age of 65, you have to be physically or mentally disabled. And again, mental disability qualifies. You have to be blind, and you don't need any work quarters. Whereas everybody knows to get SSD,
You need work quarters.
You have to have 40 work
Right.
quarters. You don't need work quarters to collect supplemental security income, and your assets are limited. You can't have more than $2,000 in cash, bank account, stocks, or bonds, and $3,000 if you're a couple. Now, if you are an individual, and let's say you have you're an 18-year-old child living in your parents' home, and your parents have substantial assets, but you have nothing, right?
Right.
And let's say you're having an emotional situation, you are unable to work for at least a year, then you can go to Social Security and apply, and your monthly payment would be $721. If you're a couple, it'd be $1,000.
And that would be a good fit for that young kid you were just talking about, because they wouldn't have those 40 work quarters probably.
They certainly wouldn't.
It's an income. It's not a payment. You write a check out. I just want to use the payments. I don't want people to think they're paying it.
Oh,
it's
no,
income.
no. You get,
would
you
they
get
would
income.
pay you.
Like, for instance, I'll give you an example. One of my clients has a child who's addicted to drugs.
Right.
They don't know what to do with them. He has no income. He's totally he just
Incapacitated.
Right, he's incapacitated. This is a couple that really ought to think about supplemental what is it
Social
called?
Security
income, SSI, because their child would possibly qualify. So we wanted to mention that because we talk a lot about Social Security, but a lot of people don't know about SSI.
Yeah, all the pieces and parts of Social Security. It's very complex, and that's part of what we do. We don't just do taxes. We help you manage your money and find good solutions.
And get you some more.
And props.
If we
Yes,
can.
Yep.
yes.
All right, but anyway, you go to the Social Security office. So if you have a child under the age of 18, then the parents' assets come into the mix. But a child 18 or over still living with the parents, if they have some type of mental problem and drugs, it's a terrible thing, but drugs is a very debilitating thing, and until the kid gets off the problem, take a look about the SSI.
So what you're saying is if they're over the age of 18, mom and dad can have more
Yes.
money in their cash, their bank
Right.
accounts, their
But-
stocks.
Right, but the kid can't.
Right,
The kid
gotcha.
can't. All right, I'm Esther Golias, the tax lady from EG Tax. We're going to go to the phones, and we're going to talk to Matt. Hey, Matt, how can we help you?
No, I'm sorry, Larry here. Hi.
Oh, hey, Larry, how are you?
Hi, guys. Of course, you know, I'm the biggest fan you have in the world, of course.
You're so sweet.
Actually, two fast questions for you. One, on inherited IRA. My mom passed in 2010. I'm the beneficiary of the standard IRA. It has about $120,000 in it, roughly. Now, up to this point, I've been taking my RMDs, but basing that on my age. I just heard today from someone else, and it's why I'm calling you, that instead of basing it on my age, I should base it on my mother's age. Is that correct?
Okay, if it's an inherited IRA, you can take it out over a 5-year period, or you can annuitize it based upon your age.
So it's your age.
So it's your age.
Okay.
That person was wrong.
Second fast question, Esther. I've got a Roth IRA and a standard IRA.
Okay.
And I'm in the process of trying to redistribute those investments. So if you just look at it from a tax perspective, what investment would have the highest tax liability, and what investment would have typically the lowest tax liability?
Well, I mean, you said you have Roths, right?
He has
I
both.
have
He has Roth
Okay,
and
but a
traditional.
Roth has no tax liability provided you had it in there for 5 years and you're over the age of 59 and a half. So there's no tax liability. You never even have to take it out. So that's the Roth would have the lowest tax
But do you mean
liability.
which one is more tax beneficial, Larry?
No. Guys, I'm asking. I had these investments in the Roth, in the standard and the Roth. So I'm trying to figure out from a tax perspective also, what type of investment should I have in the standard IRA, and what type should I have in the Roth IRA?
Oh, okay. It doesn't make any difference because your Roth is completely tax-free, and your
long as it's performing
traditional
well.
is completely taxable. So what you
Okay.
really want to go for is the biggest bang for the buck. So if you can make 100% on both of them, that's great. But when you take the money out of your traditional, it's going to be fully taxable.
Gotcha. And you know I love your podcast and your show. Esther, thank you so much.
All right. Thanks a lot, Larry. Bye-bye.
Thanks, Larry.
I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. Chris, you look like you want to say
well,
something.
he was mentioned between Roths and traditional. I know there's a lot of tax planning to go into that. There's some people who could transfer money into Roths now and pay no tax on their traditional because they don't have any other income besides
Pay no tax on the conversion.
Pay no
Right.
tax on the conversion. So that's something people may want to look at too, because again, later on, once you start receiving Social Security and a pension kicks in or your 401k, your income could be higher and your IRAs will be taxed.
So it would have been beneficial to convert to the Roth when you didn't have to pay tax on it
Yep.
versus when you withdraw on it, then you are in a
Yes.
different tax
Right,
situation
but
altogether.
that all depends on what's happening in your life,
Yes.
right?
Yep.
So that's really, really important, and that's what tax planning is all about. And I'll tell you, this is a perfect time of year to do it because here we are in the middle of the year, and you got almost half the year left, and it's a good time to take a look and see what's happening. And maybe you
Right.
started a business this year, and there's a great big loss on your business because it's a startup, and here you have no taxable income. Great time to move from your traditional or part of your traditional into a Roth because it'll be taxable, but it's sheltered by some other expenses.
Yep.
So that's part of what we'll do for you at EG Tax. The other thing we wanted to talk about is our franchises. We're selling our franchises
Yep.
around Western New York, all
Yep.
the way down to Jamestown. So if you're somebody that's a tax person and you think that you love people and you'd love to team up with EG Tax, we'd love to talk to you.
Yeah, I know we have Grand Island open, Rochester, of course, Jamestown, all the way down to Jamestown, and Jennifer is our go-to girl. And Jennifer is a story in herself. She has a franchise, and she does a great job. And so from her success, you can learn a lot.
That's true. And
Yeah.
you can actually go onto our website. I think there's the franchise
There is.
information's on there at egtax.com. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. All right, we want to talk about inheritances.
Right.
All right. So, and estate planning. Now, many times people say to me, so just like what Larry said, what's taxable when I inherit it? So first thing would be annuities.
Right.
Right. Payments from an employer. Let's say that somebody passes away and you get their vacation pay, things of that nature. That would be taxable. Self-employment that you get would be taxable. And that's what we're going to talk about. I better shut up. We're coming up on news. I'll see you on the other side. I'm Esther Golias, the tax lady. Actually, Tyler,
Yes, Esther.
I like that song.
Really?
That's by Blur, isn't it?
But I know you like
Yes,
that
it
song.
is.
Is that song too?
Yes, it is. Wow. Esther,
job.
on a roll.
I'll tell you, I sit around at night listening to
Wow.
rock,
no more
rock and roll.
no more stumping Esther
Right,
on
anyway,
these bumpers.
I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on the cell phone. We're talking about inheritances, what's taxable. Gifted stock
Yep, that's right.
is taxable because it and property and things, capital assets.
Yep,
goes
and it-
back to
to
the
the
original
original
donor's basis. Traditional IRAs are taxable, just
Right.
like what.
Now, if
Larry's
you
talking
inherit the stock, it goes to a stepped-up basis.
Right.
But if it's a gift, it goes back to the original basis.
And then U.S. savings bond interest, that's taxable. What's non-taxable is life insurance proceeds,
right.
cash from bank accounts. So somebody can leave you a ton of money in the bank, and so they pass away and you're sad and everything. But when you go to the bank account, it's free. So that's tax-free. Inherited stocks, bonds, and real estate, inherited, sold near the date of death because you get a stepped-up basis. It's taxable, but it has a high basis, so you're probably not going to pay any taxes on it. And Roth IRAs held for more than 5 years are going to be
Non-taxable.
non-taxable. So I just thought we'd talk about that. I also want to talk about filing status returns for decedents, like when someone passes away. And what you want to do in our tax planning, when we're talking about tax planning, a lot of people think, especially as mom and dad start to get older, they think that the best thing to do is to gift their home to their kids, and it's it's 6 of one, half dozen of the other. You're
Right.
it's true. It's not going to be
Go to the nursing
It's not
home.
going to go to the nursing home. But if they never go to the nursing home, then you're going to have to pay the taxes when you sell it.
And don't
So-
forget about the 5-year look back. If they go to the nursing home within that 5-year period, then it's all prorated, and so you really want to take that into
You're really,
consideration.
there is no crystal ball. So if your parents don't go into a nursing home and then you got to pay the taxes upon the sale of the house, you say, boy, I wish I wouldn't have done that. But if they do go into a nursing home and your 5-year look back's good, then you say, boy, am I it all works out. So,
Right.
So,
Or you
but
could
it's
say,
important.
boy, I wish Mitzi wouldn't have moved in with me.
Okay.
That's her
And-
mommy.
All right. We're going to go to the phones and we're going to talk to John from Williamsville. Hi, John.
Yes, Esther, I have a question with regards to my last couple of returns that I filed. I've been claiming the general sales tax deduction
Yeah.
rather than the state income tax
Uh-huh.
deduction. Okay, and then I usually get a refund from the state. Now, on the next year's tax return, I've been claiming that refund from the state as income.
Nope.
And
Wrong.
somebody says, no, you're
Right.
Wrong.
You're
not
shorting
doing it.
yourself,
I'm shorting myself. You
How
know.
how much have you been claiming, John?
approximately, average.
Oh, like maybe $500.
All right, so if you're in the 15% bracket, that's $75 you overpaid your taxes.
Right.
So
Now,
you should
can
file an amended return.
Okay. So how far back can you? Can
3
you do
years.
that?
13,
years.
12, and 11.
Right.
Okay.
So if you get $225 plus interest, maybe $240, $250, you can go away for the weekend and impress your bride, and
Now, what about the state? That also can I file an amendment?
Well, you should have taken that off on the state anyway, because the state
You
you
subtraction.
subtract the state
refund
the
that you
federal
declared.
refund on the state. So you never did that either.
No.
Okay,
No,
so
I've been claiming it as income.
On the
'cause
state.
I
no,
thought it
that's a
was,
subtraction. Now John, are you retired?
Yes.
You know that your pension is tax free, right?
Right. Yes.
Okay, just want to double check. And
Pretty
do you
much.
have any?
I work part time though too, so I mean there
So
is-
you might
there
pay
is
some New York
income.
State
I do
tax.
get a W-2.
Okay, but you know that your pension is tax free.
Right. Well,
Okay.
20,000 isn't it?
Right.
Yeah.
Are you a New York State retiree, federal retiree?
No, my wife is though. So.
All right, you knew her pension is completely tax free.
Yes, exactly.
Okay,
Now, that-
just wanted
that
to
we
make sure.
should know.
I just thought if you're opening up the return, make sure it's correct. You get it
but-
all
and don't,
all ironed out.
And
all
don't
at
be
once.
afraid to open it up. That's what you're doing to amend is very normal for
Right.
that.
Is that the same look back period for the state also, 11,
Yes.
12, and 13?
Yes.
Okay, very good. And I can get those forms online, I suppose?
Yep.
Yeah.
A 1040X and an IT 201X, and make sure when you're sending in the 1040X that you include the full copy of the correct 1040 and attach it to the 1040X. And the same thing with the state of New York. They want to see that return
And-
the way it should have been done.
And John, I want to chime in. Usually it's $45 for an amendment, but I would do it for half price because it's so small. So if you want to call our office, I would do it for like $20 a year. Just had to throw that in there.
Yeah.
Oh, all right.
So
No,
it's a
that's
lot of
good
work.
thought. And where do I call?
632-7886.
7886.
Okay.
All right. Yeah, that's good.
Just
For
a lot of
$20
work.
A year.
That's because we have the forms and we can knock
Very
it out
easy.
in a real short period of time. And of course, make sure you send it certified mail
Or come
So-
in.
so that
Right. And then bring the entire return back from 2011 and
Right, because-
2012 and 13.
Correct.
Right? Yeah.
okay.
Very good. All
All
right,
right,
thank
John.
you.
Have a great day. I'm Esther Galias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I'm thinking about Blur.
Oh,
And song.
yeah.
Is your mind a blur?
Ooh.
My mind is a blur.
That's
Yeah.
actually a really good song.
I love that song.
I know you.
because
you are
it's
not.
a great song to
Gets you
dance
up,
to.
gets you
I
going.
love
your blood
I
pumping.
love
She's
it.
not lying, Tyler.
I
she really.
I believe
love
her.
to dance. I love to dance. You can't tell that I love to dance, but I do love
Well,
to dance.
what I was going to say, anyways, with John,
Yes. Oh, you mean taxes.
taxes, if he's getting a $500 refund a year from New York State, he may want to look at even reducing his withholding from New
right.
York to get it throughout the year and
his
not
part-time
get
job.
that refund. Because you know what? We've seen it, New York State taking longer and longer and longer to issue refunds.
Well, and the IRS is doing the
the
same
thing. Yep.
because they're underfunded, and so they say, well, we just don't have the resources, and so what are you going to do? Be really mad at them?
Yep.
That's right.
A lot of good that's going to do.
Hey, take all my money and
But
I'll just
really,
wait.
the way to fight fire is with fire. You don't have to send in as much money to the federal and state. Get your refunds so that it's as you earn them, rather than in a lump sum at the end of the year. You can get the money up front as you earn it, and that's what we'd recommend. This way, you aren't you aren't sitting around chomping at the nails. Gee, I hope the refund comes today. All right, we're going to go to Ted in Cheektowaga. Hey, Ted.
Good afternoon, Esther. Thank you very much for taking my call.
Yeah, what can we do for you?
A few years ago, my mother had a stroke, and, obviously we had to take care of her. My father was sick at the time, and he since passed away. And my brother and I are trying to figure out her financial situation. So I just learned that she had a couple IRAs, and in 2013 I called each company. She didn't take the minimum distribution, and this year we didn't request it either. As of 2013, for whatever reason, they stopped sending the checks automatically. I don't know what happened.
How much is she supposed to take out, Ted?
Well, the two accounts, the total's only $22,000.
It totals. You mean the total
The
that she was
total
supposed
account
to take, or
in
the total of the
IRA,
account?
One's 12 and the other's 9.
the balance.
All right.
21,000.
All right, so it's not
And
much.
the
How
person I
old
talked
is
to
she?
For the financial service company said before we do the 2014, I should talk to a tax advisor. So
All right.
I
Well,
thought
first,
of calling your
all
show.
right, first of all, the penalty is 100%. I
And
mean,
you wanted to
50%
know
of
how-
what she didn't take out. So if she was supposed to take out $2,000 and she took out nothing, the penalty is $1,000. All right, even though she's
what
not
is the percentage of the penalty?
50% of the amount she was supposed to take out.
That's what I thought. So there's no
but wait,
hardship
Ted.
provision or
Whoa,
anything.
wait, hang on. But there is a form you can fill out requesting to have the penalty waived because of her physical situation, because she's
Had a stroke.
She's had a stroke, and there was nobody taking care of her
Finances.
for her finances. We just found it out, and I bet you they'll waive the penalty. So there's a special form you can fill out and ask them to waive the penalty.
Okay, do you know what the number that
It's right on the bottom of page 2 of the 5329.
The form
Okay.
number?
Yep.
And should we go ahead then and request the minimum distribution for 2014?
Yep.
Yeah, I mean,
Including all the other years she didn't take out. You
Right.
have to take out all that money,
Right.
too.
So also do 2013
Right.
now also.
Right.
All
Okay.
right. Thank
And
you so much.
Okay, thanks, Ted.
Have a great day.
Thank you. Because that is true that there is a penalty, but like all penalties, you can say, I mean, and if you think about it, it's almost a no-brainer. If they don't allow that, I'd
Oh.
be very surprised, because
She
what do
wasn't
you do
in
when
her
you're
full capacity.
ill?
Yeah,
You know?
yeah.
So anyway, we're going to go to Ed in Medina. Hey, Ed, how are you?
Fine, Esther. Thank you.
What can we do for you?
Well, I heard you just talk about a New York State pension retiree is tax-free. So I just retired. I was a teacher.
Oh, you'll be happy.
Yeah, I actually got my first direct deposit yesterday. August 1st.
Yay!
Congratulations.
Yay. Well, your entire New York State pension is tax-free on the state, taxable on the federal, tax-free on New York State, but you have to subtract it. So when you're doing your New York return, you carry everything over from the federal, but under the subtraction portion, that's where you're going to subtract your New York State pension.
Okay, that's what I was curious about, because I'm having money taken out because I thought I had to pay federal, so I'm right.
You have to
Yeah,
pay
you have
federal,
to pay
but not
federal.
state.
Okay, now I have another question for you.
Yeah. Hey, can we have, you know what, Ed, we got a short break. Can you hang on till the other side of the break?
Yeah, I'll try to. Thank
All
you.
right, thank you. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on the cell phone. We're going to take a short break. We'll see you on the other side. Okay, all right. That's not one of my hot songs. All right. What is it, Tyler?
Sorry, that's Low.
That's Low? The name of the group is Low?
No, the name of the song is Low.
What's the name of the group?
Hi.
Cracker.
No.
Oh, okay. High is
I
low.
is singing low.
All right, let's see. We
Go back
got
to Ed.
Mr. Ed. Are you there, Mr. Ed?
I am. Can you
All
hear
right,
me?
I can hear you. What? All right, your second question.
Okay, my second question. Because I retired halfway through the year, I'm 63 and a half, just to let you know that.
Uh-huh.
And I understand I can only make $14,000 or $15,000 getting Social Security, which I applied for.
Right.
Now,
That's right.
How do they know I retired halfway through the year? Because when I do my income tax, I'm going to have more than $15,000 a year.
I know, but Social Security knows when they know. Social
When you
Security
retire.
knows, Ed. And so when you have you applied for your Social Security?
Yes. You said he
I
did.
did.
All right, so
I'm gonna
they
search
know.
my-
See, they know that from now on you can't make more than 15.5. Okay.
But the first year,
But
it's
the-
okay.
But the first part of the year, if you're under the age of 65, your wages prior to that don't count.
Right. What happens is when you work, your employer has to file quarterly with the federal government in 940 or 941, and that records every employee and their Social Security number and their earnings for that quarter. So what's going to happen is New York State, come the next school year, you're not going to be there, so you're not going to be on their next on their
941.
Yep.
Right, and so believe me, Social Security. I'm sure they asked you if they know you retired, so they know that all the wages you earned prior to retirement, they don't count. But going forward is a horse of a different color.
And then, Ed, I wanted to chime in and say, don't forget some of your Social Security, probably up to 85% of your Social Security will be taxable. So you might want to eventually think about having some withholdings on your Social Security. I have a lot of teachers who are retired who have some withholdings on their Social Security.
So if you're getting $2,000 a month in Social Security for 6 months, that's $12,000, and 85% of it's going to be taxable. So over $10,000 is going to be taxable. If you and your wife are in the 25% bracket, it's going to cost you $2,500, tax-free on the state. But you want to make sure that you got that number covered so you don't get sticker shock come April the 15th.
Wow. So is everybody's Social Security taxable now?
Just certain special people like you, Ed.
It all depends on income.
A lot of people.
If your income, including half of your Social Security, is over $32,000, and I'm assuming a teacher made more than $32,000, and you add your Social Security and you add half of your Social Security to it, if it exceeds the $32,000 figure, then half of it's taxable until it gets to 85%, and at 85% in your situation, it sounds like it's going to be the number.
Wow. So I could actually contact Social Security and have them withhold money.
Right.
Oh, that's interesting. So you opened my eyes on that one.
And then another little thing I'm thinking of, Ed, you're like a perfect little specimen, is you said you have a part-time job. You might want to put some money into an IRA every year because until you reach the age of 70 and a half, that'll help your tax situation some.
Right. That's true.
So put money into an IRA still, a traditional.
Well, that is the problem because I'm also an attorney.
Oh.
Oh, so you're
I do that
self-employed.
part-time. I call it my hobby. So
All right, so you're self-employed as well.
I am.
Okay, so you already know about the self-employment thing, the whole
Tax.
Social Security
Yes,
thing.
yes, I
right?
know that. But I was concerned about going over the $15,000 and how that would work. So,
Right.
so theoretically, because I retired half a year, I can only make half of the $15,000, or doesn't it matter?
No, it's the net profit. It can't exceed the 15.5 for the period of time that you were. So the money that you made prior to your retirement is okay. The balance going forward can't be over the 15.5.
Oh, okay. So I have 6 months to make $15,000.
Right, and this is your net profit, not your gross.
Right.
Okay.
Correct. So after that, every year it's $15,000 for a 12-month period.
Until
you
you're
reach full
65.
retirement age.
Then you can
Correct.
make $1 million. So make sure if you are doing like any kind of Celino and Barnes things, that you got a
Next
a
career.
big settlement coming in. Make sure you're 65.
Yeah. Oh,
Okay.
I thought it was limited to $40,000 after that
No,
age.
you can make whatever you want without having to
really?
pay back Social Security.
Oh, good deal.
Okay.
Good deal. Maybe I'll totally retire and not work until I hit 65.
There you go.
Then I'll start back up.
Well, You
Hey, thanks
could,
a lot,
but
guys.
what Tiffany's
Always
talking about
enjoyable.
is what you really should do is put money into your SEP since you're self-employed.
And you can only do it if you have earnings.
Right, so that's something else. You might want to give us a call, Ed. We'll be very happy to talk to you so we can do some tax planning
He's a
for you.
complex
All right.
little guy.
It is.
Thank you. Since you're a perfect specimen. Tiffany says you're.
Thank you. I'll
Thanks.
tell my wife that.
All right, thank you.
Yep.
So Ed was a perfect specimen.
Yeah,
it is
I
interesting,
need to
though.
see his face though in order to.
It is
completely-
interesting though because it's like unpeeling an onion.
Yes, yes.
You know.
Yes.
All right, we're going to go to AJ
That's
in
right.
Lockport. Hey AJ, how can we help you?
Hi, thanks for taking my call.
Yeah, what you got?
I heard a few calls back that the transfer of ownership from parents to their siblings takes 5 years.
No.
5 year
There's
look
a
back.
5-year look back.
There's a
If
5-year wait period.
Yeah, in other words, if your parents, let's say you got elderly parents and you're worried about giving up the equity in your home to Medicaid because they're going into a nursing home and the home would be at risk, there is a 5-year look back. In other words, if you transferred the home last year and your parents go into a nursing home this year, then that equity, 4 years of that, 4 years of the equity in the home is still at risk if they become Medicaid patients. So that's what the 5-year look back is.
And so, in other words, a nursing home, they say, "Oh, is that 5-year period lapsed yet? Can we still go after her house?"
Right.
Right. So that's what we were
So
referring
that's the
to.
look back.
In my situation, my parents gave me the house and put it in my name.
How many
and
years
for,
ago?
Oh, probably 15 or so
All right,
years
so
ago.
you don't have a problem with that. That's not your problem.
There's just one extra step here.
Yep.
We sold the house. It was in my name. We put the money in an annuity.
Uh-huh.
My mother was listed first, and I was listed as the co-owner.
On the annuity.
The nursing home is
on the annuity?
And the state is claiming that
Yeah.
because her name is first on the annuity, they're entitled to that money for her nursing home stay.
Okay, so why did you put your mother's name on the annuity?
I don't know why that happened. We were listed as co-owners.
Okay, but who do you have proof? What I'd suggest you do is contact an attorney. All right, because
I did do that. And he thought because it was giving her money. That's why it was it was in her name because she was receiving disbursements every month against the annuity money.
Okay, but the whole thing is really what happened. You technically gifted back your mother the money when you made her a co-owner on the annuity.
Half of it?
So it would seem to me that only half of the annuity would be at risk. So that's where I would say that an attorney would be somebody that could go back to whoever filled out the papers and see if that you don't have a legal recourse, because the state of New York certainly will press you into paying if they can get you to do it.
Right.
Okay.
And that's what's happened. I went to an attorney and he said there's nothing that he can do to resolve the situation.
Wow.
I heard you talking about it, and I was just
Chris,
wanted
what
to hear
were you
your
gonna
side
say?
of it.
Well,
I was wondering if Jeff Katz or
now are they aware that you were co-owner and half of it is yours,
Yes.
and they still want the whole thing?
Yes.
Now, I'm not casting aspersions on your attorney, but have you sought a second opinion?
No.
I would, if you wanted to call us on Monday, 632-7886, we have 2 or 3 attorneys that I think would just give you the information right over the phone. One of them is Dennis Kitchen, the other one is Jeff Katz, and they're elder law attorneys, and that's really what you want. They're used to dealing with the state of New York and Medicaid, and that's what you want to make sure you have somebody that's a specialist. Okay?
And I know you probably don't know the answer, but I'll ask you. This has been going on for over a year now. She's been in the nursing home for a year.
Uh-huh.
Would you think there'd be any recourse now?
I can't say. I don't know. Yeah. I mean, where there's life, there's hope.
I mean,
or
it
something.
could at least stop the bleeding,
right?
And stop it from the halfway point, because half is really yours, and they're not entitled to that half.
Right. So but they're taking the position that everything was hers. In the
Yep.
first
And
place.
if you're paying bed tax, since it sounds like
That's
she's
true.
private pay, that's
928.
6% paying to New York State monthly through
Is
the nursing
refundable.
is refundable. So it could be about a $6,000-7,000 refund from New York State.
Call us Monday. We'll help you. Okay, AJ?
I will.
All right,
I will.
sir.
Sure
Thank
will.
you.
Thank you very
You're
much.
welcome. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone, and Joe in Buffalo. Hi, Joe.
Hi, ladies. Good afternoon to you.
Hello. Nice to talk to you.
Okay, I'm just going to give you a little background before I get to my question.
Yep.
Fast.
Okay, I was in the process of filing Chapter 13.
Okay.
I was insolvent, and I had an attorney retained. I know it was at the end of the year. I did receive tax forms from both my mortgage holders on the first and second. I looked at the tax form from the first mortgage, and it showed 0 interest paid to the mortgage for the year, so I didn't have to include anything on my tax return. The second statement, I didn't even open, figuring it was the same thing. As it turns out, it was a 1099-C from the
Right.
second mortgage
Okay,
holder.
I only got a minute, and I'm going to do it fast, Joe. When
Okay,
it's a
okay.
cancellation of debt is taxable unless you went through a bankruptcy. So there's a form that we can fill out for you. If you call us at the office Monday, bring in the bad news letter from the IRS so we can do the form for you, and we can get you out of everything. Okay?
Beautiful.
Thank you, sir.
I'm glad I heard you today on the radio so I could give you a buzz.
Yeah,
Thank you so much.
we'll take good care of you, sir.
All right,
Thank you. Bye-bye. I'm Esther Golias, the tax lady, EG Tax. We'll see you next Saturday. Our email address is egtax at hotmail.com. And until next Saturday, I'm Esther Golias, the tax lady. Have a great week.